I'd say three to 5 minutes on the numbers. And then the rest of it's focused on, how do you actually subscribe? Like, how do you partner with us? Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, as always, we got Matt Jones. Matt, how are you doing today?
I'm doing excellent. Still in the groove of analyzing deals and keeping my eye out. Hopefully I'll find something soon. How are you doing?
I'm doing good, man. I've actually got quite a few deals that are on my list that we're looking at. We got a deal here that off market, but apparently now there's another offer on it. So that's, off market's not really off market. It's kind of off market, but it's still marketed. I mean, the second a broker has it, it's really truly marketed. So either way, but we're going to look at that deal and we're digging into the fine details. And we told the broker, hey, expect an offer today or tomorrow. Really waiting on confirmation from our property management company to see these rents that we're assuming that we're seeing that are in the market. Are they achievable? Do you think they're achievable for our building? And if they say yes, then yeah, we're going to write a pretty, maybe not aggressive, but aggressive offer to try to be able to get the property under contract. So we'll see where that goes. You never know. 9 times out of 10, or actually, I should say more like 99 times out of 100, we end up not getting the deal, but you don't get them if you're not writing the offers. If you're not trying, you're not going to ever get a deal. So gotta push forward.
Good point.
So Matt, what did we talk about last week and what are we going to talk about today?
Well, last week we talked about doing due diligence on a property that you found and got under contract. And the next step that we're going to talk about today is doing a webinar to be able to raise money from your investor base.
Absolutely. So I like to do my due diligence first if I can. It depends on where you're at. I think in your experience a little bit too. If it takes you a long time to raise money, if you're worried about how long it's going to take to raise, you probably want to start that money raise process as quickly as possible. But we need to get a couple things anyways done. So typically we're well into our due diligence, maybe even almost all the way through it. Maybe we're even all the way through it. Well, what we have to do before we start raising money, or what we should do, is we should get our private placement memorandum done. So we get this property under contract. We've already talked about, getting investors into our deal. So we've already got our investor list. We've been talking to them about the types of deals we're doing. Maybe we've even done a couple deals, so they're already aware of what we do. But now what we have to do is engage with the attorney. The property's under contract. We got the purchase and sale agreement signed, and we engage with our attorney and say, hey, this is the raise we're doing. Here's the terms. Okay. And let's put this private placement memorandum together, the PPM. We're also getting a slide deck put together. So we can put our own slide deck, or we can hire somebody to do a slide deck. A slide deck is basically a marketing tool that you're going to use, a slideshow, a presentation that you're going to use to present to your investors. You want it to look professional. You want it to, be able to show some of the exciting features of the building, some of the exciting features of the market, all that kind of stuff. And you want it to be informational too. Okay. You don't want it to be all fluff. You want it to be facts and information. We don't want to sell people fluff. We want to sell people reality. I think that's really important. So right away we engage with the attorney. We say, hey, we're going to do, this is the type of split we're doing. So I'll just give you, for instance, on the last couple deals we've done 2 types of shares. We've done an A share and a B share. In the A share, we're giving 10% preferred return to our investors with no additional equity upside. So once they reach that 10%, there is no upside beyond that. And then we've got the B share. Usually on the A share, we're not putting too much more than about 20% of the allotment goes to A share. After that, we got the B share, and the B share then for depends on the deal, but for our typical deal, we're about 70-30 split. So 70% of the profits go to 70% of profits after the A share gets paid, by the way, go to the B shares, the limited partners, and then 30% goes to the general partner. Sometimes we'll have hurdles. So we get to a certain return expectation. Once we get to a certain point, we might go from a 70-30 down to a 50-50 or down to a 60-40. Okay. That gives us as the general partnership incentive to, work really hard, perform really well. And if we perform well, we get paid a little bit more. Okay. And then we typically have an asset management fee, anywhere between 1% and 2%, and then an acquisition fee, and that's anywhere between 1% and 3%. And you could have other things. There's all kinds of other ways to do it, but that's kind of how we set it up. There's, like I said, there's so many different ways to do it. I know a lot of people that do it different ways. So what you got to look at is what works best for you, what works best for your investors, and what works best for the market. Okay. So you got to look at that and decide, okay, which way do we want to go? Again, anyway, so we engage with the attorney, say, hey, this is what we're doing. They get that PPM out and you get your slide deck put together, and then we host a webinar. Okay. And so I just did a webinar for a raise not very long ago. What I end up doing is I send out an email to my entire list, and that email is kind of a little bit of a teaser email, shows some highlights that we're going to be talking about. So maybe shows a little return highlights, maybe shows a little highlights about the market, has a picture or two. It may, and like our email had my team on there. So myself and my two partners on the deal, and kind of like a quick little snapshot bio on us. Most people know who we are. So, you could, or you don't have to include that, but just like a little teaser email to kind of give people an idea of what we're talking about. And then also, of course, when the webinar is, and a button for them to be able to click on to be able to register for the webinar, because we want them to show up. Right. Mm-hmm. And that's the webinar day.
And do you also gather like their email addresses so you can send them a recording of the webinar afterwards? So even if they aren't able to attend, or even if they do attend, they still get that video that they can review at their leisure.
Yeah. So, I mean, of course they're on our email list. We already have their emails. I actually typically send out 2 emails. So I'll send out one to everybody who registered for the webinar. That I'll send out right away. So they get the recording right away, because a lot of people that will sign up don't necessarily attend. So we might have 200 people sign up, but only 100 attend. That's really typical. Mm-hmm. So it was 100 people that didn't attend. They get to watch the webinar replay. And then the next email that goes out shortly thereafter is an email to my entire list that gets to see it as well. So for the most part, the most people that are watching it are the people that signed up. But if they didn't sign up, they're probably not that interested. So yeah, you definitely want to send it to that list of people that signed up. We use Zoom for our webinar. You can use there's all other sources other than Zoom, but we go through Zoom. And our webinar is mostly information about the market, about us, and about the building. We're not talking a ton of depth into the financials. Okay. So one of the things that you want to do when you focus on these presentations is you want to make it so that the investors have been there, right? So they feel like they've seen the place. So for instance, we started our webinar, people showed up early. I popped up a Google map. Okay. And we showed them where the property was. We're walking through, showing them the neighborhood. We're showing them the front of the building and kind of going around to some of the houses, to some of the other buildings that are around it, and showing them what's going on. Okay. So it gets them familiar with it. Now, unfortunately, where this building was located, we couldn't hire a drone. Otherwise, we would hire a drone to fly, and really get a cool video of that. But because of the location and the restrictions that they have, they don't really allow drones in that area. So we want them, again, we want them to feel like they've been there and they've touched the place. We want to have a lot of pictures of what's going on with the building, with the neighborhood. Talk about the building history, talk about the problems we're going to solve, talk about the market, talk about the excitement that's happening in the market, all that kind of stuff. We're going to focus, let's call it 30 minutes on that. And then 5 minutes is going to be focused on the numbers. And then the rest of it's going to, another, I'd say three to 5 minutes on the numbers. And then the rest of it's focused on, how do you actually subscribe? Like, how do you partner with us?
And is your webinar in that order?
Yeah, it actually is. So we're going to talk about our team and our market, and we typically talk about the team first. Okay, that's the general partnership team. Our experience, that's the property management team, the contracting team, the architect, whoever the main key players to make this thing happen. And then we're going to talk about the property and what's going on with the property, what our business plan is. And we're going to talk about the market. And then we're going to last hit on financials and how do you actually sign up and partner with us. So that's in order.
And I know you generally lead your webinars, but if there's anyone else in the GP, then they also take turns presenting portions of it. Is that typical?
However you want to do it, that's how we do it. So in the last several that I've done, I lead it off. I do my portion and hand it off to one of my partners partway through, and then he hands it off to the other partner. But it's however you want to do it. You could just have one person be the main presenter and the other people fielding questions, or, really whatever's more comfortable.
And do you answer questions from potential investors throughout, or only at the end, or kind of both?
Typically at the very end, unless it's something that makes sense during that time, right? So usually you're going to have whoever's presenting is not the one fielding questions. It's going to be somebody else, a partner, somebody somebody else. So if it fits, then yeah, go ahead and throw that. Hey, by the way, we got a question here that's speaking exactly about that, blah, blah, blah.
What are some typical questions to be prepared for in the webinar?
I mean, there's all kinds of stuff. Know what you're talking about. Know what your business plan is. Know what's going on in the market, and know your financials. I mean, and know who the team is and why you're qualified to buy this building. I think that's how you prepare for it. There's so many different questions, Matt. I mean, there's a lot of questions around returns and expectations and the timing and that type of stuff. I'd say those are some of the biggest questions. How are you going to complete the construction when it's occupied? How confident are you on the budget? That type of stuff.
What kinds of warnings or disclaimers do you give during the webinar?
Yeah, we talk about, first of all, when we talk about our return expectations, we mentioned that these are projected numbers. We have a disclosure always on the webinar that our attorney sends to us, and so we post that on the slide deck itself. We're going to talk about our timelines and all that kind of stuff and how they're not set in stone. We don't want people to come with unrealistic expectations or to get confused because we've said specific things. So one of the nice things about recording it is if you're careful and if you talk well, if for some reason, a lawsuit happens, which hopefully it never does, hopefully everything goes well and it never does. But if for some reason a lawsuit ever happens, you've got that slide deck, you've got that recording, and that can be used as evidence to say, well, look, we covered this. They're suing us because we're still holding on to this building. And they said we're going to sell in 5 years, but you can see clearly we said that it's 5 to 8 years, and it could potentially go longer depending on what's going on in the market and our discretion. And so it's good to be able to have that recording and as evidence. And you know what? If you messed up and you didn't say certain things, well, let's not get into a lawsuit here because we didn't cover that. Let's just try to play nice with this person move on.
With advertising your webinar, you said that you send it out to your email list, but do you advertise ever in other ways like Facebook or your website?
Okay, so that's a really good question, Matt. So there's rules for specific types of offerings. So all my offerings up to this day, I shouldn't say that. Almost nearly all of my offerings up to this date have been offerings where there's called 506B offerings. You cannot advertise to the general public. You cannot solicit. You have to have a pre-existing relationship with them, whether they're accredited or not accredited. You have to have a pre-existing relationship. And that's something that people make the mistake of. They go, "Oh, they're an accredited investor. I don't have to know them." Yes, you do. So if you have the right kind of offering. So when I said almost everyone, I had a score offering, it was called, and that was a offering that I could publicly advertise. And so if you have that 506C, that Reg D offering that allows you to solicit, then yes, you could go ahead and post it on Facebook, LinkedIn, wherever, talk about it on podcasts, whatever resource that you want to put it out on, you could do that.
Yep. And I think Regulation A, you can also advertise, but those are more rare because they're kind of expensive to do.
Yeah. Yeah. And so if somebody were hear this podcast, right, and they were calling me up and go, "Hey, I heard you've got this investment that you're raising on," I would have to say, appreciate you reaching out. We can definitely talk about what it looks like to invest in our company. But unfortunately, this investment is held for people that I have a pre-existing relationship with, and I could not accept them in the investment. Now, we don't have room for them anyways, but even if we did, let's just say we had room and we could allow them technically into it, and they called me up based on hearing me on my podcast. If I were to accept them, that would put the whole raise, that would put everybody's money in jeopardy. That would put myself in jeopardy. And I definitely don't want to do that.
Yeah, I know you told that story before of some younger person advertised on Facebook for an offering when they shouldn't. And what kind of fee did they get from the SEC?
I can't remember what it was. It was big. It was like a $475,000 fee, and they were doing like a $500,000 raise or something like that. It was big, especially for the amount of money they were raising. It was like, wow. And you're putting everybody's money at risk. You're putting your reputation at risk. You're putting yourself at risk. It's just not worth it. And now that person you can have as an investor, right? You could now talk with your attorney. I'm not sure if you advertise on Facebook a deal, and I'm not sure about that. But like, if somebody heard me talking on a podcast about my investments and what we do and blah blah blah, and then they call me up, I can eventually have them as an investor. I just have to form a relationship with them. We have to have a conversation. That's one of the reasons why I send out a newsletter to people, is because it helps them get informed about what we're doing. That's a reason why I won't take anybody's money unless we've had an actual conversation with each other. Like, I want to get, and plus I want to get to know people. I want to know who's investing in my deals anyway. I pride myself on having investors that have invested on multiple deals. We've got 62 investors on this deal, and out of 62, there's only 5 people that haven't invested with us previously. So we pride ourselves on having repeat investors, and 4 of those people were referrals to us that we built a relationship with. So, I mean, you want the right people investing in your deals. You want to get to know them. The SEC does it to protect them, but it's also to protect you.
Yeah, that makes sense. So, do you host once you record the Zoom calls, or I'm sorry, the webinars on Zoom, do you then put them on Facebook, or I'm sorry, on YouTube as an unlisted thing, or how do you distribute that to your people?
Yeah. So, good question. We have a portal that we put it on. So our portal is a secure portal. You have to sign up for an account. You have to have the URL. You can't just do it. You can't just get it. And then somebody else could, I guess, send it to you, but you have to sign up for it. You have to create an account, and then you can watch it on there. We do post it on YouTube unlisted, and actually link then to our portal from there. We used to just before we had the portal, just do YouTube unlisted and then send that link out along with other documents through an email. But now everything goes into our portal. So our investors will click on the portal, create the account if they don't already have an account, and invest through there. So the whole process runs right through that portal, and it works. It works slick, and we can do ACH everything right through that.
And after the webinar, and you send the webinar out to the people that were on the list, what other documents do you include with that?
Yeah, good question. So webinar, slide deck, PPM, underwriting. So those are things we want them to be sure they look at. We do e-sign on our subscription agreement, so they get that right away. They can review, sign right online. That way, that I feel like when you get people to commit and to sign, they're a lot more committed. When they haven't signed, they're a lot less committed. When somebody signs something, they feel like they're committed. I don't take soft commitments. So most of the guys out there that you'll hear, they take soft commitments. So they go, hey, we got this deal. Come in, just do a soft commit. You're not committing to it. You've got plenty of time to review the PPM. You've got time to get your money in, and we'll answer any questions, but we do want you to get in and soft commit. And then they get, $6 million raised, but of that 6 million, only 3.5 actually go through with the deal. I don't do that. I don't like that. To me, that's a lot of stress. So for me, it's commit, sign the PPM, you're in. Okay. We end up getting pretty much nobody drops out. Very few have ever dropped out of a deal that have committed for me. It just doesn't happen. So.
Well, that gives you an incredibly high conversion of people who say they're going to invest, who actually invest.
Yeah. I haven't really tracked the numbers, but I can count on one hand how many people, and it's 2, by the way, that have committed and not actually invested in my deals. And so we're probably 99% or above. I know we're 99% or above. So
that's incredible. It might be an industry record. I don't know.
I think it's just how you present it, right? I think anybody can do it. It's just how you present it and how you talk to your investors. And we tell our investors, quite frankly, we want you to be serious. If you're going to commit, we expect that you're going to invest. So.
And you approach it pretty sincerely. So I think people respond really well to that.
Yeah. Yeah. I'm not trying to be a jerk about it. I just don't want to mess around with it. Like, I don't want people that are wishy-washy. I want people that make a commitment and stick to their commitments. So,
yeah, very good.
So yeah, that's basically it. Expect a lot of phone calls after, expect a lot of emails after. People are trying to really figure out, some is really minor. Maybe they missed something on the webinar. Maybe they didn't quite understand something, but expect a lot of the emails, phone calls, that type of stuff, and field them quickly, and you'll do good. Your raises, it's funny, when I first started doing this business and raising money, it took me, many, many weeks to raise $1 million, and not to sound arrogant, but like now it takes just a few days to raise multi-millions of dollars. And that's not to brag upon it. It's to tell those who are kind of beginning in this journey that if you do the right things, if you do the things that we talk about on this show, that you hear other people talking about, very quickly, you'll be able to raise a substantial amount of money in a quick period of time. So it isn't rocket science. It's commitment, it's communication, and it's doing what you say, you're going to do. So.
Very good.
So awesome, Matt. Well, that's all I got. You got anything else?
That's it for me too.
All right, man. You have a fantastic rest of the day. Make every day a Saturday.
You too.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.